All right, let's get into it. Sometimes the market feels like this giant, complex machine, right? One little thing happens over here, and it sets off this massive chain reaction. That's exactly what we're going to unpack today. So you open up your portfolio and yikes, a sea of red. If you're looking at it and asking yourself, what on earth is going on? Trust me, you are definitely not alone. The recent dip has hit pretty much everything, but the reason why isn't just one simple thing. Okay, so here's the thing. It's not just one event that's causing all this. It's a whole series of interconnected links. The source material uses this great analogy, kind of like that old nursery rhyme, the house that Jack built. We're not looking at separate problems. We're seeing this cascade effect where one thing leads to the next, and that's what's driving all the volatility we're feeling right now. So what's the first domino? The first and maybe the most important link in this whole global chain? Well, for that, we've got to look east to Japan. There's a monumental decision coming from their central bank, and it's got everyone holding their breath. Now, just look at this timeline. This is pretty wild. We're talking about a policy that's been in place for nearly 30 years, a near zero interest rate. But come December 19th, the Bank of Japan is widely expected to hike rates by 25 basis points. That would bring their policy rate to a level we haven't seen since 1995. This isn't just turning a dial, it's potentially flipping a massive switch on the global economy. And why does that little rate hike matter so much? Well, it puts a dagger right at the heart of one of the oldest, biggest plays in finance, the yen carry trade. For decades, the game has been simple. Borrow Japanese yen for practically nothing, and then go invest that super cheap money into higher-yielding, riskier assets all around the world. And yeah, that includes crypto. And this is exactly how that whole thing could unravel, step by step. First, Japan raises its rates. Suddenly, borrowing yen isn't free money anymore. It's expensive. So what do investors have to do? They have to sell their riskier assets, like crypto, to get the cash to pay back those loans. And the ripple effect? Liquidity starts to dry up across the entire global market. See how the chain works? Okay, so let's move on to the next link, because this is where it gets even more complicated. While this massive macro storm is brewing, there's a whole separate fight happening right inside the crypto industry itself, and it's just adding more fuel to the fire. So here's a really interesting point from the source material, and it's important to note this is speculation. The theory goes that a heavyweight like Morgan Stanley might be getting pressured to kick companies like MicroStrategy, companies with a ton of Bitcoin on their balance sheets, out of their key stock indexes. The source even hints this could be a politically motivated move, which would create a huge headwind for the whole market. But the crypto world isn't just taking this lying down. A whole group of these publicly traded companies are fighting back. They've actually co-signed a public letter arguing that kicking them out of indexes hurts regular investors by limiting their access to these growth areas. But more importantly, they're warning that it could literally force them to sell off their Bitcoin holdings just to stay in the club. Talk about pressure. And just to pile on, there's another front opening up around the stablecoin, Tether. S&P Global just slapped it with their lowest possible rating. But, and this is a big but, when you look at Tether's own numbers, as reported in the source, they show reserves exceeding liabilities by almost $7 billion. It's this disconnect, this gap between the rating and the reported financials, that has people worried about a coordinated attack on crypto's plumbing. Okay, whew. So you've got this huge external pressure from Japan and this intense industry fight. With all that swirling around, let's zoom out and just take a quick pulse check. How did the broader market actually hold up this past week? Well, the story in the stock market was really a tale of two markets. You had the Magnificent Seven, those mega-cap tech giants, and they actually managed to eke out a positive week. Meanwhile, the other 493 companies in the S&P 500, yeah, they got left in the dust. It just goes to show you how narrow this market leadership has really become. And if we look across the board at other assets, it's a real mixed bag. WTI oil, it climbed back over $60. Gold, interestingly, finished the week down, even though the dollar got weaker, which is a bit strange. Silver, on the other hand, went on a tear, hitting a new record of $59. And Bitcoin, well, caught right in the middle of all this turbulence, it ended the week in the red. And if you want a perfect picture of what Bitcoin's price action has been like lately, the source uses this hilarious but pretty accurate name for it, the inverted Bart Simpson pattern. You get that sharp spike up, a bunch of choppy sideways action, and then bam, an equally sharp drop right back down. It's a textbook sign of high volatility. But here's where it gets really fascinating. A little glimmer of hope, Maybe? Despite all the fear, despite the price dropping, the spot Bitcoin ETFs actually saw a net inflow of over $54 million this week. That's huge because it broke a 2-day outflow streak. It suggests that at least some of the bigger players, the institutional money, saw this dip and thought, you know what? This is a buying opportunity. All right, so we've followed all these different links in the chain, from global economics in Japan to corporate boardroom fights. Let's try to tie this all together. What are the key things you really need to be watching from here on out? First and foremost, circle December 19th on your calendar. That Bank of Japan decision is everything. Second, we've got to watch what happens with that whole index exclusion drama for crypto companies. Third, keep a close eye on Bitcoin's performance versus the stock market. Are they going to keep moving in different directions? And finally, you got to watch those daily ETF flows. They are a fantastic real-time gauge of what the big money is thinking.
And that really brings us to the big overarching question, doesn't it? In a market that is this tightly connected, where a decision made in Tokyo can shake up a crypto company in the US, which one of these links is going to be the first to snap? If you found this video helpful, be sure to smash that like button and subscribe so you don't miss your next Daily Edge. More news in our Telegram channel in the first comment. See you next time.